Okay, guys, so now we have LEA Accounting. Jenny Sasser is here to share some information with us. Are you just gonna come up here?
Yeah. Okay. Hello, I'm Jenny Sasser. I'm one of the team accountants in LEA Accounting, and I also assist with some EGAP issues. So I'm going to talk about the end-of-year process, the final expenditure report and carryover, some helpful accounting reports, and application processes. Oh, pressing the wrong button, sorry. So for the end-of-year fiscal process, I'm actually going to go back and talk about budget amendments for a second because some of that ties into the financial statements. Before financial statements can be approved, there must be an approved system-wide budget amendment. And we in LEA Accounting can't review the budget amendment until EGAP applications are at final approved, which means that they have to pass the superintendent approval level. So once the EGAP applications, the revisions completed, go ahead and make sure that they get through to the LEA superintendent review. Once that happens and federal programs reviews it, then we review it, then we can approve it. Also make sure that any equipment over $5,000 is budgeted in a 500 object code. Capitalized equipment purchases must be approved in the budget amendment as capitalized equipment. In the financial statements, that's one of the first things that we check is that the capitalized equipment has been approved in EGAP. So please make sure if you have some capitalized equipment that was expended but not budgeted, or it was budgeted in the wrong function code or wrong object code, then you need to talk to your team accountant or federal programs. Also, one of the reports we use is the Fund Source Financial Report, which I'll talk about when I talk about the accounting reports, but we're looking for 10% variances, which have the red 10% next to them on the right-hand side. If you do have a 10% variance there, you must submit a waiver for it, and I've listed what the waiver needs to have below. Title I is only allowed 15% carryover of the original allocation. If you have not expended 85% of the original Title I allocation, a waiver can be requested every 3 years. And if you're unsure about whether or not your district has gotten the waiver recently, you can contact your team accountant and they can look it up and let you know. And I've also listed what that waiver request has. If you are not eligible for the waiver, then that carryover is considered lost. I've also listed the addresses that you can mail those to. Also, right before the financial statements are due, the original budgets are due, the original EGAP applications must be approved in order to draw down in order to draw down the funds via ES2s. So they need to be submitted for review as quickly as possible. It also affects the consolidated FER. If the consolidated FER, like we're coming up to the end of 25, beginning of 26, that FY26 consolidated EGAP application must be approved before the 25 FER can be completed. And that's important, which I'll tell you in a minute. So for the FER and carryover, they can't be begun until the financials have been approved by LEA Accounting. Each EGAP application has its own FER that must be completed. Cash received, if it's less than the expenditures, an ES2 is automatically generated by EGAP. It'll be the pending transaction amount, or if the cash received is more than your expenditures, then the difference must be refunded to ALSDE as a payable, because federal grants are reimbursable grants only, so you can only request funds that have been expended, or you can request the next month's payroll in advance. If possible, don't rely on the automatically generated ES2s, because for whatever reason, if you have a late budget amendment approval, then there's a chance that you could lose some of that carryover money, because you have to have that budget amendment approval before you can request the carryover funds. So after the year ends, you should know your total expenditures. If you haven't received enough funds to cover all of your expenditures, go ahead and submit that last ES2 in October, early November, to request the final amount that you need. like I said, the consolidated application for, like, example, FY26 must be approved before the 25 FER can be completed. Once the LEA completes the FER, the LEA team accountants will review it, and then the final level of approval is assistant superintendent final approved. Once it gets to that approval, then that's what loads the carryover into the current year EGAP and creates a revision so that the carryover can be budgeted in EGAP. Some helpful accounting reports can be found in AIM under LEA Accounting, and then reports and accounting reports. For budget amendments, we use this EGAP budget grid. When you go in EGAP and you populate the budget page in there, all of that will roll over into this budget overview page, which should mirror the EGAP budget grid report in AIM. We use this to compare to make sure that what was approved in EGAP is what is actually done in the file. If it's not, you need to talk to your CSFO, talk with federal programs, make sure that whoever's correct is correct and the other one is corrected. Another report that shows kind of the same information is the Fund Source Budget Report. This shows all the expenditures in the file by function code, then program code, and then object code. And finally, for budget reports, the indirect cost earned versus budgeted. That anticipated indirect cost earned column shows the absolute maximum indirect cost that can be claimed for each federal program. It is not the maximum, but it's a good starting point to make sure that you're not overclaiming. So it could be less, but it could not be more than that number. For financial statements, this is the Fund Source Financial Report again. If you have those red 10% variances, you'll need to submit the waiver. Another thing to look for on this report is salaries and benefits that were expended but not budgeted. These are not allowable in the financials and must be corrected, or you need to talk to federal programs about how to get it approved in EGAP. And the indirect cost earned versus collected report is the same as the budget report. It just shows the indirect cost earned based on the coding, the maximum that you can have. But again, this is not the indirect cost number. It's just a good starting point to make sure that you're not over collecting indirect cost. And for non-competitive grants, I've listed all of the non-competitive grants there. These allocations are determined by LEA Accounting based on a variety of criteria, some of which includes average daily membership. Once LEA Accounting determines the allocations over the summer, they're loaded into EGAP, and the EGAP application, once it has been approved, you can draw down those funds. For the FERs, once the FER has been approved, that loads the carryover into these applications, and then once the application has been approved and the system-wide budget amendment has been approved, then the carryover funds can be drawn down. There are 3 types of competitive applications. There's new, continuation, and carryover. The new competitive applications are 21st century and homeless. The EGAP opens for those, and the district will complete the application. Once the applications are reviewed and graded by federal programs and marked as approved or not approved for funding. If the application is approved and modified to match the allocation amount, then the approval loads the allocation into the application and ES2s. 21st Century is the only continuation grant that we have. These allocations are loaded into EGAP by LEA Accounting over the summer, and these have to be approved in EGAP before you can draw the funds down. And then carryover is 21st Century again only. Once the FER is approved, that loads the carryover allocation into EGAP, which will open up a revision in EGAP, which then needs to be rebudgeted. And that's all I have. Any questions? Thank you.